They get excited all the time about different things. Today it's real estate. Yesterday it was crypto. Then it was classic cars. Then it was stocks. And your spouse or your significant other is like, this too shall pass, right? They're not going to entertain it because you're going to be a shooting star and tomorrow you would chase something else. You got to own that if that's you. Um, because real estate's not like a stock or crypto where you can just get out of it. Folks, you've probably heard this young man talk about being the lazy landlord. That's something that he is very well known for. But I don't remember, if I have, it's been years. I don't think I've asked him, what are the keys to being a lazy landlord? So I want to have a conversation. I want to break it down and really ask Dion, what does it mean? What are the keys to being a lazy landlord? So Dion, thank you for being here.
I'm glad this is the topic today because I've been getting a lot of comments lately because I've been adding in my videos things I'm doing, right? I added a closet at my house. I tiled my brother's bathroom and his rental because Frank, old guy REI, flew up here and showed me how to tile. And so a lot of the comments are, you're not retired, you're just a handyman or a contractor that has some rentals. And from an outside perspective, I can see that's the thought because I'm showing I'm doing things.
Right.
That when you retire, there is no end to the amount of things you can do. And we've said this many times in several different videos. We wonder how we had time to work. And so to be a lazy investor, a lazy landlord, I wanted to know, can I do it if I'm lazy? Because I didn't want to work. I don't mind work. Like I can work hard. I'm a good employee, but I don't like having to work, right? That mental problem that happens if I don't work this week, I don't eat next week. Like that's a very depressing way that most people live.
Yeah.
Right. Half the country has less than $1,000 saved. 22% of people have zero saved, like some stat I heard this morning. Those are people there. If you don't work, your bills don't get paid. You don't eat. And I lived a lot of my life that way. And I wanted to reach financial freedom so that I can choose to work. So I can choose to like put in a closet, which means someone else came over here and did the tape and the mud and the texture and all of the stuff that I don't want to do. But I've never framed something before, so I'll learn how to do that and I'll never do it again because I've done it once now. But to be the lazy landlord, it starts when you start investing. Right? I specifically targeted properties that would have low tenant turnover. Right? I want 2 or more bedrooms. I want side-by-side units. I want washer dryer hookups in the units because tenant turnover, while it's expensive, it's costly on our time. You have to talk with the tenant that's leaving and figure out the deposit. And then once they leave, you have to do an inspection. Now you have to photos and post. And even if you're using a property manager, it's okay. So I'm going to have a month with no income. I have to give approval on the screening the property manager is going to do. Right. So the lower the turnover we can have, the more lazy we can be as a landlord. I wanted to make sure that I retired with certainty that I don't have to go back to work. Right. So I didn't reach financial freedom, which was for me about $4,000 a month because I house hack, I live for free, I drive a paid off car. I don't really have a lot of expenses. My kids are older and have moved out because they hit that happy 18th birthday. Here's a restraining order age finally. And if I hit $4,000 a month in retirement and then I had some vacancies, I'd have to go back to work, right? So I waited till cash flow from rentals was 4 times what I needed. So it passed 16,000. So now I can handle a recession, a pandemic, a stock market crash, an eviction moratorium, or go through several evictions and still not have to go back to work. Because when we're lazy, it's not that we don't want to do anything. It's that we don't want to have to do anything.
Yeah. Yeah. The thing that I really remember about your story, and it's so counter the message to the masses, is you purposely built a portfolio thinking about the minimum number of units, not the maximum. And that's really a mental mind piece because a lot of people think bigger is better. They got to have 100, they got to have 1,000. And you're like, dude, if I could get by with 14, I'm in. I think that's really freeing because when your number is 5 or 10 or 12 units, everybody should think that's possible, and it is. When you start talking about, oh, I need 100 units or I'm a loser, that's That's just the wrong mindset. So I think it started very early for you when you're always saying, what's the minimum? I think that's very powerful.
Right. There was a mental shift and it was changing a question. So if you go up to almost anyone and you say, uh, do you think it's possible to retire early? Most people would say yes, because they've heard of people doing it. You change it to, do you think you will retire early? Not you can retire early, but do you think you will retire early?
Mm.
Since the idea is people think if I'm going to invest, I want to have so many millions of dollars in stocks, right? The 4% rule turns is if you have any kind of, 50,000 plus a year living expense, it's millions you need invested.
Mhm.
If it's real estate, people start thinking in unit counts. They hear people with hundreds or thousands, or they get into syndications or whatever. And for me, it was, do I think I could retire? Would be, it's too fuzzy.
Mm.
But when I changed it to, do I think I will retire? It was, what exactly would it take for me to do that? And then I came up with a sentence, the right amount of cash flow from the least amount of units. And so I had the same option as people like Millennial Mike does, who could go to a cheaper market. And instead of putting a down payment on a property in my area, I could have purchased a property for that amount, wait for some appreciation to kick in, and then do private money lending on it like he's doing, that slow burn. Instead, I saved up. It took a couple of years. I buy a property in Washington, and yeah, it only got around at the time, $400 to $500 a unit in cash flow, which it sounds like a lot if you're in some markets, but in my market, I could have made more. I could have had a better return investing in Gary, Indiana, right? He was getting a 25% return on his money. I was getting a 10% return. But then you go 2 years in the future,
Mm.
once I'm stabilized, once rents change, and it's 1,000 plus. And I've being lazy, I've also done some things that some other people haven't done. I've never done a cash out refinance. I've never taken out a home equity line of credit. I've never sold to 1031. I've got a property that if any other investor looked at my portfolio, they would say, this property you should sell. It's a paid off single family house rented for $3,000 a month. I would walk away with over $300,000 if I sold it, and I could put that as a down payment on a fourplex and increase that $3,000 a month. Logically, it says you should do that. But one, I'm lazy. I've got a dialed in tenant. I was trying to think. I've interacted with that tenant twice in 12
Mm.
months,
Wow.
and I also kept that house through a divorce. So there's this little petty part of my brain that says you're never going to sell this property, but it's the strategy of recycling cash flow versus recycling capital, right? Recycling capital, it takes, you have a better end. You have a better 15, 20 years exponentially. The growth hits that hockey stick and will be better than mine. But I didn't want the growth.
Mhm.
Being lazy, I wanted freedom. And freedom came from a slow, steady 10-year journey of recycling cash flow, the money from the rentals, the money from my work going back into the next rental. And I stayed in a high cost of living market on purpose because it takes less units to reach financial freedom.
Yeah. I think there's so much wisdom in this. And then the other thing is what you said it earlier, but we'll hit it again, the asset type, right? You were picking side by sides, washer dryers. You were picking things that would eliminate turnover. You also are very famous for the binder strategy, right? Getting the tenant to ask for the rent increase, getting like having the tenant be happy, paying a little bit more. Um, the lazy landlord, it takes upfront processes and procedures, but once you dial them in, you can get by with only working a couple hours a month, which I would say is, pretty outstanding.
Something my dad always said, because I got picked on in our family, right? Youngest of 13 siblings, all work, all run tree services. I'm the lazy one that joined the Marines because that was easier than tree work.
Wow.
And my dad always, some form of compliment was, if you ever want to find the easy way to do something, ask the lazy person because they'll find the easy way. And that was what I would do. I would figure out the fastest way to get work done, not so that I can use the Parkinson's rule and fill my time with more work, right? The reverse of that. I would do nothing, but I
Mm.
couldn't do nothing until I got everything done that needed to be done. So when it comes to real estate investing, the reason I wanted a 10-year journey is if I planned a 20-year journey, I'd have a bigger portfolio. I'd have better generational wealth. I would have more money in retirement that I already don't know what to do with. But with the 10 years, it was, what is the quickest way to make work optional. And it was 10 years. I could have had bigger growth in the first 2 to 4 years, but it would have taken that's thinner margins. If you recycle your HELOC, your
Mm-hmm.
cash out refinance, you're reducing cash flow. That's what everybody usually forgets to mention to
Mm-hmm.
cash flow later. So I really wanted to resist the urge for things to go faster because it's slow is smooth and smooth is fast. Right?
Right.
Taking the time to save the down payment instead of finding a partner, instead of
Yeah.
doing creative or seller or any of those other things that could have made it happen faster. Yeah, I took 2 years to save a down payment to start the first house hack, and then 2 years for the next duplex. That's a question we've got from Mark here, the
Mm-hmm.
financial firefighter. It says, what point did you realize you could make work optional? It was before I had the first duplex. It did it because one of the weird things I had to do, and I have a video coming out next week on weird things I had to do, was take risks. To be able to retire early, I had to take risks, right? Normally we keep our head down, we just do our job. And I was a single parent with one source of income. And so I wouldn't take risks. But as soon as I realized if I bought one duplex every 2 years for 10 years, I'd have five. I'd be living in one. So I'd have at the time, moving in, I'd be paying a little bit. By 10th year, I would have free living.
Mm-hmm.
And I'd have one rental with 10 years of time, one duplex with 8 years of time, one duplex with six, right? So the cash flow would have increased on these properties to that 10th year point that if I only got one duplex every 2 years, work would be completely optional. Now the income snowball kicked in and I ended up with triplexes and fourplexes and a lot faster than every 2 years after the first four. So I retired with 16 rental units instead of 10. And then it's grown since then. But it was as soon as I saw because right now there's somebody sitting there going, I don't know if it's possible. Today's market, we've got high prices and high rates. We had that in 2018.
Yeah.
2018, we had interest rates above 6%. We had prices that have been going up since 2011, and they passed 2008 in 2013. So in 2018, everybody was saying this is the highest we're ever going to see. Wages have pretty much doubled from 2018 to 2024. It's where a lot of this inflation has come from. Minimum wage in fast food restaurants now $20 in California, right? Where you have a lot of your rentals, Mike. It's always been a challenge. But when I thought only do this every 2 years, that's doable, right?
Yeah.
It's like out of your book, which I didn't find until 2018, was get to four.
Yep.
Right. People think I need hundreds of rentals to retire, or if you're doing that, I need $100 per door. Yeah, now you need X number of doors instead of thinking the yield method. But when I realized it would just be one thing every 2 years, a very lazy way of doing this. I don't need to be a realtor. I don't even need to do everything for a year, maybe a year and a half between purchases, other than continue the discipline that it takes to increase income and save the difference so that I have the down payment to save. Mark, that's a great question. I don't know that very many people, because the next question is, do you think most people are capable or changed? No, I don't think most people are. When we have the stat that I heard this morning, 60% don't have $1,000 for the next emergency, 22% have zero saved. Half the people making more than $150,000 a year live paycheck to paycheck. 48% of the people between 55 and 65 have zero saved for retirement. They're at the cusp of the regular retirement age and they have zero saved. So can most people do it? No, absolutely not. But can some? Because would most people sit through this video? Seriously, would most people go, oh, they're talking real estate and they're talking finances. Wait, let me see what's on Netflix. That's exactly in the first 10 seconds what would happen to most people.
Yeah, I think most people are actually encouraged by what I call the doomers or the crash bros, right? They would much rather be told what they want to hear. People want to hear it's hard. People want permission not to do the work. Doing the work is hard. Getting six pack abs, hard. Having a great relationship, hard. Becoming financially free, hard. Well, all of those things are worth it. The problem is that most of us don't want to work hard. We'd rather sit on our ass. We'd rather blame somebody else. It's always somebody else's problem. It's never my problem. And if you're going to live that way, yeah, you can't help. So, um, yeah. But I want to go back to what Dion said. He saw it clearly in his eyes before he even started. I think that's magical. I'm reminded of Sarah, uh, who I interviewed. She was in the military, and her mental shift was, I'm going to use the VA loan to buy a property below the median that cash flows after I leave. And Sarah's story, she was supposed to be a statistic, right? Teenage mom, two kids. That wasn't supposed to end well. She joins the military, buys 5 houses on the VA, and she's financially free. And it's can you see it? Is it crystal clear in your mind's eye? And that's just so powerful. So I think you've got to believe. It's actually why I wrote my second book. That was the reason I wrote my second book, 15 Conversations with Real Estate Millionaires, because I wanted to give you guys something, 15 different stories that you could hopefully find one that you could continually to reread, right? I can't help you. The first 5 years suck. It's hard. You make your mistakes. The cash flow is a drip. But if you can get by that and you can get the compounding and you can get inflation's a feature, not a bug, you can get to the other side. That's what that book's for. It's supposed to be encouragement. Like, oh, I'm stuck. I'm having a bad day. Well, go read chapter 12. Go read chapter 8 to know that it's worth it. So uh, pretty interesting.
And then Mark asks a follow-up question here, which is really tied into being the lazy investor. And Mark says, can you explain the concept of diversification and its importance in the investing portfolio? So being lazy, I don't have the mental bandwidth to take the time to learn to start and grow a business, right? There's three real main paths to financial freedom. I've tried it a couple times, failed both times. And I don't have the bandwidth to, or the time to invest in stocks, or the income to invest in stocks for it to have a significant impact on my savings, because I didn't start saving and investing until I was 40. So I focused on real estate. Since I'm 100% in real estate, imagine the risk of being 100% in any asset class, right? Like Kevin O'Leary talks about, don't be more than 20% in any asset class, no more than 5% in any one asset. And I'm 100% in one asset class. So I had to figure out a way to diversify, and I've done it in two specific ways so that I could sleep well at night with confidence, knowing that I'm not going to have to go back to work. And part of that is have good reserves, don't over lever. I invest where I plan on rents can drop at least 50%, and I wouldn't have to go back to work, even though they've never actually gone down in Class C properties since we've started tracking the data in 1940. You can Google that and look it up. Chart only goes up. I don't want to own a 10-unit apartment complex as my first investment, because that's 10 units pulling tenants from one area. All of the economic drivers in that one area impact your rental. So if Boeing closes down a shop, a port goes on strike, or a BRAC meeting happens and a base closes, all of your units can be impacted. I would prefer, if I had a larger portfolio, I would absolutely have a 10-unit complex, right? But when I was starting out, I wanted that duplex. I wanted to make sure the next duplex was at least 10 miles away, close to different economic drivers. So I've got the state capital where our LNI, DSHS buildings are. I've got the military base, I've got a port, I've got colleges and hospitals. So each duplex is at least 10 miles apart. And then I finally bought a fourplex that was a little close to one of my duplexes. But my portfolio at that point was over 11 units. Then, so the diversification first one is spread out, right? I kind of like the idea of 10 miles apart, but not different states, right? I would kind of focus on one market to get that dialed in. The second way I diversified is I diversify my tenant base, right? I have about 1/3 military, 1/3 Section 8, and 1/3 working or retired. And it's never a perfect 1/3 balance. And it would be probably illegal in most places to advertise Section 8 only, or no Section 8 allowed, or military only, or no military allowed, right? Imagine the backlash you would get from that. But I can control where I advertise. Right. I have a unit coming open. I want it to go to Section 8. I call this housing authority. I send them a link to the listing. I say, this goes live Tuesday. Can you share this with your clients that you know that are waiting for a 3 or a 4 bedroom? If I want to advertise on the base, I'm probably going to get a military or a civilian contractor maybe that will apply to work there. So I can kind of control that average so that the vast majority of my portfolio is not going to be impacted by a prolonged government shutdown. Yes, if it goes long enough, military members might skip a paycheck or two. So I'd be delayed on my rent a month or two. Even Section 8 hasn't, there was I think it was the longest one was a 68-day shutdown of the government or something like that. Section 8 continued to pay, but it's possible it can go on long enough where it doesn't. So diversify that way. Being lazy, I wanted to diversify in one asset class to protect my wealth.
Yeah, when I think about diversification, I'm always reminded of Charlie Munger's quote. Basically, diversification is just a way to, you know, get average. Um, I really believe that. I think there's, I mean, you look at my ORaaT rules, right? Number one is focus. You know, I talk about getting wealthy, you know, become elite at something is step two. I I have never met, hope hope people hear this. I have never met anybody worth 10 million bucks or more who didn't get that 10 million bucks from one thing. A company, real estate, maybe stocks, something. If you're going to move the needle on your wealth, don't diversify. Get really, really good at one thing and continually get better, continually learn, continually do all of those things. When you get to a point where it's wealth preservation, wealth protection, then yeah, you can diversify. Um, I think diversification is just a, I don't know, it's not the greatest return in my opinion.
No, and I do believe in the focus, and then you can diversify later to protect your wealth, right? That's there is at some point where my net worth might become so much. Write this down. I might buy a stock. Like I
Maybe.
honestly think if I owned one now, I would still be working.
Oh yeah, for
Like
sure.
that's the mentality of it. I'm so trying to say if I can say this without sounding arrogant. I'm so good in my asset class, right?
Exactly.
I'm so good at my asset class that I can do this with confidence.
Exactly. And that's where you have to get to. When you get to a point where you have enough and the numbers get really, really silly, then you can diversify. I think that's where most people get wrong is they try to diversify too early and they just go nowhere. They go nowhere in all asset classes. It's pretty frustrating.
There is a question here that I think Mike really should go to you
Okay.
because I can give the anti advice
Yeah.
from an ORaaT family member, and it's who's in witness protection, by the way. Just that's why the name is hidden. Any advice for someone who is struggling to get their spouse on board? I've been wanting to start for a year, but my spouse is very resistant, very conservative. We've listened to Jason and Jen, but still my spouse remains unconvinced.
Yeah, this is a tough one. I get this question probably 50 to 100 times a year in various forms. And it really, to me, usually, again, I don't know this situation, but usually there's an underlying, I'll call it trauma, for lack of a better word. Maybe somewhere historically, they or some close family member tried real estate and it didn't work out well. So there's some kind of trauma or memory of loss, of significant loss. And today we have to remember that the Great Recession and foreclosures and short sales was not that long ago. So there's a good chance that there's some trauma that you have to go uncover. You have to have that discussion. And it's probably not a lot of fun. But if you don't know what it is, um, you're not going to get by it unless you call it out and you speak it out loud. I have found. So that's one piece of advice. I don't know if that applies in this case or not. The other one is, um, some people are just raised very conservatively where they're just like go to work, save your money, 401k. I mean, that's, work till you're 65 and they're conditioned that not good or bad, just you have to realize that. And if that was in my case, Olivia, um, where I would have gone is I would have likely got to a point where we had a conversation about, honey, we're just going to do one. Because what often happens in this case, when you talk about real estate investing, the other party in their head just thinks, oh my God, we're going to get one and then two and then five and then it's all of this bigger, 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 bigger. I would do everything I could to comment, we're just going to do it one time. We're going to try it once. So I would get that in. And the other thing that I would do is I would show them that I'm doing the work. There's a lot of people I talk to. It's usually guys. I'm sure it applies to ladies, but I've heard it mainly from guys. They get excited all the time about different things. Today it's real estate. Yesterday it was crypto. Then it was classic cars. Then it was stocks. And your spouse or your significant other is like, this too shall pass, right? They're not going to entertain it because you're going to be a shooting star and tomorrow you would chase something else. You got to own that if that's you. Um, because real estate's not like a stock or crypto where you can just get out of it. There's a lot there. The other thing to think about is a nice kind of really easy step in, if it fits your family dynamic, is a house hack. Now, I'm not talking roommates. Let's be very, very clear. I'm talking two houses on one lot. I'm talking, hey, the big house in the front and the little house in the back. Um, there's so many ways that you could technically be real estate investing that's maybe enough to have that conversation. But yeah, I mean, those are the first things that come to me, Dion.
So I've always been good at keeping custody of my kids or keeping assets like my house through the divorce. I've never been good at keeping a spouse around. So I don't think I would be the source to give that kind of advice. I know that I've talked to several people who were trying to get their spouse on board, and sometimes what seemed to work was like a friend that I met in Florida. When I went down there, spent a couple months, we actually went to lunch and we had the same conversation. His spouse wasn't on board, and I basically said, "Well, have you found out what matters to your spouse?"
Mm.
Right, right. What is it? And with them, what ended up ultimately being the thing that got her on board with the house hack was this would have increased their cash flow from their jobs or reduced their spending by about $600 a month. And I said, okay, great. They were very young. I said, how about you take $200 of that increase to your cash flow or your ability to save, and you say that that's hers as a new couple, and you can never ask her what it's for, what she spends it on. She can take her friends out. She can go treat someone else to something. She can completely blow it on something you don't like or whatever, and you can never question her on it. And then you take the remaining 400, and since it's you who want to invest, that 400 is for the next investment. So there's no real tangible gain for you other than what you're trying to get the spouse to do, which is your gain. But your spouse gets that. So what is it that matters to them? And it might not be finances. It might be time freedom. It might be the spouse is very conservative. One of the biggest risks you can have is having your W-2 be your only source of income. If you can get one or two other sources of income, something like a layoff or a company shutdown would have less impact on you. And figuring out what matters. And so I think you started it right, Mike, with it takes a conversation. You got to get into that conversation to get them on board. And sometimes they're not going to be.
No, yeah.
That's the hard one to accept. It could be that way. I've got friends and family that I've tried to convince to get into rentals for a decade now, and they'll never make a move. I've got one that's the closest is waiting for the crash or interest rates to come down. So he's never going to buy because either one of those would scare him away from buying.
Exactly. Well, very cool, Dion. We're going to close this one out. Folks, if you wanted to follow Dion, where do we send him?
YouTube, Dion Talk Financial Freedom. And I think a great question to wrap up that we can answer later in the future, in Futureland, one of my favorite Dionisms. Mark asks, if we switched portfolios, what would be our first move? So we'll cover that another day.
Yep, I like it. Thank you so much.